Don't be fooled by all of the trade wars smoke and mirrors. Behind the sensational headlines are major trends that have been in place for years and are not slowing down. Today, Adam Taggart and I break down what really matters in today's trade war. Welcome to VRIC Media, the most trusted voice in the mining and metal sector.
This is Jay Martin.
All right, here I am with Adam Taggart. Adam, it's great to have you back on the show. I'm looking forward to this, man.
Hey, it's a real pleasure, Jay. Again, I just want to give you a public apology for not being able to make your conference earlier this year. I got grabbed for jury duty. Just terrible Murphy's Law timing, but felt terrible that I couldn't make it. Heard it was a wonderful event, as always, and look forward to being there next year.
Man, it was a great 2 days. You were definitely missed on stage on a few of those panels. So I'm glad you're coming back January 25th and 26th, 2026. Yeah, it's coming up. So look, like no shortage of things that we could talk about today. Here's where I want to start, though. And I won't even say what day it is because the news flow will be different in 6 hours. But here's where I want to start, Adam. What's your general thesis on the motivation behind Trump's, call it tariff war, tariff strategy? Because you could sort of like accept headlines at face value. I don't tend to do that. You probably don't either. You know, what's the bigger game, or do you see a bigger game that he is playing? And what's the end goal, if you can see one at this point, with the tariff strategy?
Great question. And it's a good thing we've got an hour here, because we could probably take up the whole hour just on this topic. So I've been spending a lot of time over the past couple of weeks, month and a half, really listening to Trump and the members of the Trump administration, his cabinet members, in terms of what they're trying to do economic policy-wise. And whether you like the administration or not, one of the things you can't fault it for is communication. These guys, they're out there every day in front of the TV cameras. So I actually find it pretty difficult to keep up with all the interviews that are happening on any given day with the different Trump cabinet members. So to the extent they're actually being, open with us about what they're trying to do, they are very clear and very communicative. So I actually feel like I've got a pretty good sense of what they're trying to accomplish. And Jay, let me preface my response here by saying, look, this is not coming from any sort of partisan perspective. I'm going to really try not to say whether this is good or whether it's bad. I'm just going to try to lay out what I believe this administration is trying to do. And one of the messages that I've been emphasizing a lot to my viewers recently is, I think a lot of people expected a repeat of Trump 1.0, where he'd come in and use the stock market as the scorecard for his success, and that if the market started to struggle at all, at the earliest sign of any weakness, he would step in and either pivot from whatever he was doing that was making the market unhappy, or do what he could to try to juice the S&P. And I think it's a totally different ballgame this time around. I think Trump's first administration ended frustratingly for him. And I think most of his time there, he felt pretty thwarted by even the folks that were in his own administration. And that's why there was so much churn and turnover there. He described him as sort of, in that first administration, as the dog that caught the car. I'm not necessarily sure he thought he was ever going to win when he first started running for president. He then did. And he had to rely on the entrenched Republican administration or establishment to advise him on who to put into his cabinet. And very quickly, I think, began realizing that his vision was too extreme for a lot of the establishment guys, and that a lot of the people that were on his cabinet were actually starting to work, actively work against him and thwart him. Whether that was good or whether it was bad, I'm not going to say. But I think he, when he had his 4 years in the wilderness after he lost to Joe Biden, I think he really spent a lot of time zeroing in on exactly what he wanted to do and recruiting the exact people he wanted to implement his strategies for him, so that he could hit the ground running on day one like he has, right? And again, you can fault the administration for a lot of things, but they have definitely, been laser focused on trying to implement their vision at a pace we've probably never seen before in a new U.S. administration. So anyways, to the spirit of your question, what are they trying to do here with tariffs? I think the tariffs fit into a bigger grand strategy for Trump. And this is the main point I'm trying to get folks to appreciate, which is I think he's a very different guy than Trump 1.0. I think Trump is looking at the 4 years that he has, or the 3 years and 10 months he's got left, really as sort of a version of a world war, where he's got a grand strategy that he wants to effect. He feels that America is at a crisis point, and he wants to get it to the best outcome that he can. He wants to avert the crisis and put America on much better footing for generations. So I think he's really playing for his legacy here. And the reason why that's important is a lot of things that people would normally think a president would be concerned about: a precipitous drop in the stock market, short-term souring relations with key allies, an economic recession even. I think for Trump, those things are secondary, right? He's really trying to remake the American economy and America's position in the world. And so he's willing to take a lot of short-term disruption and pain, and he's even used the word pain, on the way to get there. So I don't think this is a guy who's going to be whipsawed around by investor sentiment or complaints from Wall Street. I think this is a guy who's kind of lashed to the mast here. And come hell or high water, he's going to do whatever it takes to accomplish what he wants to accomplish. Now, what does he want to accomplish? He and his team have been very, very clear that their main goal is to, basically redesign and right size global trade and America's role in it. And as Trump has been, very vocal about, he feels that America's kind of gotten a raw deal over the past bunch of decades, that a lot of countries have had unfair trade policies and quote unquote taken advantage of America. And this is, yes, with tariffs, but probably even more than that, what his team refers to as non-tariff trade barriers. So these are what America perceives to be unrealistically restrictive regulations that don't let American goods get in their markets. It could be state subsidies to domestic industries that give them an advantage over American producers. Lots of examples of this. China, obviously, probably being the worst offender out there. And so, what he's doing right now is to try to say, okay, look, I want to break that cycle of abuse for America. I want to get to much fairer trade deals for America, but hopefully ones that work for all of our key partners. But that's just a first step for Trump on this. What he's trying to do kind of holistically is he's trying to shore up the future prospects of the American economy, of which this trade renegotiation is step one, like I said. He is, obviously trying to shore up America's border security, and you've seen a lot of progress on that already been made. He's then trying to stimulate a lot of economic growth at home, so to put America on a different economic growth trajectory than it currently is. These trade renegotiations will be a big part of that. That's going to bring increased dollars into the U.S. It's going to reshore U.S. manufacturing. So he's going to be creating a jobs renaissance here. Again, this is all what he's trying to do. I'm not saying he's going to be successful. I'm not saying whether it's good or bad.
Yeah.
As part of that growth agenda, he is also trying to take a chainsaw to regulations here inside America. That's the next big focus of his, that and tax cuts are the next big focus of his. He's trying to get a big tax bill pushed through in the near term, even if there end up being sort of higher tariffs, higher trade costs in the near term. His expectation is that, okay, well, people will have more money left in their pockets to be able to absorb that, right? The deregulation stuff, that takes longer to materialize, but he's trying to, really push that through Congress right now. So that's all to boost growth. At the same time, he's trying to get America's fiscal spending under control so that America will make more and spend less. DOGE is obviously a big part of the cost containment. He's working hard with Congress to get continuing resolutions passed to start putting constraint on Congress's profligate fiscal spending. He's trying to get the debt ceiling under control. So, all these things are going on in parallel. And the reason why I kind of go through all those holistically is because what he's really trying to do is take America from one fork in the, one path on the fork in the road that he sees it going down status quo, which he thinks will end in economic calamity for America, and this is why they cite the exponentially growing debts, and we basically are just slouching into a debt crisis in a forever increasing deficit spending scenario there. And he's trying to get America on a much more economically and fiscally sustainable path going the other way around. So like I said, for him, I think he is looking at this as sort of like a World War type of endeavor and mission. And so if you're planning on him blinking, if you're planning on him backing down, if you're planning on him saying, oh, this is just a trial balloon and it looks like people don't like it, I guess I'm going to just curtail things and try to appease folks here in the short term, I think you're highly likely to be disappointed. Now, I say that not even an hour before we hopped on here, Jay, Trump just announced a 90-day moratorium on most of the tariffs, not on China specifically. So there's going to be all sorts of curveballs along the way here. But I still even think that 90-day moratorium is not inconsistent with this don't expect Trump to blink comment that I just made. So the more you look at the trade part here, yes, Trump is trying to get better trade deals for America with everybody. And he's trying to get more foreign capital coming into America. And there's already been, 5 or 6 trillion worth of commitments from different countries out there and major multinational corporations. But honestly, I think at the core of it, what he's trying to do is he's trying to bring China to heel. He sees China as the biggest abuser and I think biggest geopolitical adversary for America on the world stage. And what he is trying to do, and this might sound a little crazy given his approach so far, but I think what he's trying to do is he is trying to secure the support of as many other countries as he can to then be able to try to box China in. And, many people have been criticizing him, especially from how Liberation Day last week went, and said this is the exact wrong way to do that. You should have taken your time. You should have treated your allies more respectfully and gone to them, with a charm offensive and try to strike all these deals beforehand and then go after China. I think Trump doesn't feel like he's got enough time for a whole variety of reasons that we could talk about if you like. And so what he said is, well, I need to do that, but I got to try it by a different, faster route. And so he basically pulled out the big stick and told everybody, look, we got to do a trade deal really soon. I'm sorry, I got to put this pressure on you. But as part of those trade deals, it's, look, we're going to lock up hopefully better terms for each other, but we're also going to agree about what we're not going to accept with China. And so he's trying to basically force that solidarity here in the short term so that he can really have a lot of bargaining position vis-a-vis China. And potentially, I'm not saying this is the case, but it's one of the scenarios that's been floated around out there. It could be either an increased deterrent to China making a more aggressive move against Taiwan, or at least it could be lining up a lot of the economic part of the Allied response to China, if indeed ever decides to act on Taiwan. So I'm not a geopolitical analyst. I can't really comment intelligently on the probability of that, but I've certainly heard some speculate that may be part of the urgency of what's going on here.
Yeah. Okay. That was awesome, Adam. Thank you. So, a couple things that stood out as you were speaking. I agree. I was surprised by Trump 2.0 seemingly at this point in his candidacy, not caring so much what the market does. He said that publicly many times. I don't care if it goes down. Obviously, I don't want it to, but I can't, and that's different. And also, I wonder if now is the time that he can afford that, because he's secure in his position. The primaries are still 18 months away. If you're going to sort of try to script the hero's journey here, you have to crash something before you raise it up again, and if he's going to bring back the stock market as his scorecard, it would make sense to do that maybe a year down the road, right? Like, pull that lever when it makes sense. He said publicly that he's going to try to find legal grounds to run for a third term. His administration has said that as well. They're going to try to find legal grounds for a third term. I think they'll find them, I think they will. And I'd love to talk about that with you in a minute.
Sure.
But before we get to that, on the tariff strategy, that makes sense to me. And If you're going to come out and say we will mirror your trade barriers until you bring them down, that's kind of been it, right? Reciprocal, that's been it. We're going to mirror your barriers until you bring them down. That's a race to zero. It's another way of looking at that, and it's made me wonder. Love to know your take if the tariff strategy is actually an anti-tariff strategy covertly, because the intention here is to. If you want to inspire buying American, you can try to do that by inspiring 340 million Americans to buy American. But there's a ceiling on that, right? You're much smarter if you can convince 6 billion global citizens to buy American. And what's the barrier for them? Well, each country has their own tariff on American goods. And so I think you'll get some activity. You put a 25% tariff on Canadian lumber. So now the American importer buys American lumber, but it's not really a good strategy because American importers buy Canadian lumber because Canada's gigantic with almost no people in it. Canada does lumber really, really well, right? Cheap, high quality lumber. So, and you should want your entrepreneurs to buy the cheap inputs. Like that's logical. So to put a barrier there that says, no, now you're going to buy the expensive American input, that'll work for the time being, but there's a lot of inputs you can't create. You can't create nickel, right? And Canada supplies 40% of America's nickel. So there's a ceiling on how much American consumption can stimulate the American economy. The bigger play, I would think, would be to go to the rest of the world and get them all to bring their barriers to zero, which is kind of what you mentioned. Because on the surface, tariffs in response to trade deficits doesn't really make sense to me, especially when you look at the list of countries that have been identified. You'll see some that make sense: India, China, Mexico, Canada, for sure. Figure out better trade solutions. But when you look at countries like Botswana is on the list, Bangladesh is on the list, Lesotho, a country most people have never heard of, in South Africa, their country GDP is only 2 billion. So to look at a country like that and saying, we're buying your diamonds, which America is, but you're not buying anything from us, is ridiculous because Lesotho can't afford anything made in America. So there's never going to be anything but trade imbalance with the majority of the world when you're the world's wealthiest country. That's just, it's always going to play out that way. And so that argument never really stood up to me. But regardless, if you can find global unity and removing any barriers to buying American goods, if you can afford it and if they're attractive enough, that's the bigger lever to pull on. What do you think about that?
Yeah. So, look, I'm going to be speculating here, folks. So it's not like I've got a, inside line to the president. But so in many ways, this is classic Trump, right? And Trump, himself, describes his negotiating strategy is, he says, but before I negotiate, what I like to do is crack open the door to the room where we're going to negotiate and toss in a grenade. Right?
Yeah.
And then I only step in after the dust has settled, right? He just likes to put his opponents on their back heel from the get-go, right?
Yeah.
And typical Trump, we've seen this many, many times before, is he'll ask for the world. He'll say something outrageous, right? Knowing full well it's probably never going to happen, but he can hopefully get you somewhere halfway there, right? Mm-hmm. So it's the classic anchoring, right?
Yeah.
So I do think that Liberation Day caught everybody by surprise because everybody was expecting it to be reciprocal tariffs, right? And instead, he had this crazy calculation that nobody else was really expecting, and nor a lot of people just thought, hey, that's just crazy. Because to your point, Jay, a trade deficit in and of itself isn't necessarily a negative thing, right? Now you can have a trade deficit and quote unquote be getting screwed by your trade partner, but you oftentimes can have a trade deficit and it works out best in both partners' best interests. So I think what happened there was, I talked earlier, in Trump's mind, he doesn't like tariffs that other countries have against us, right? And I agree with you that really what he wants is everybody to agree on no tariffs, right? So he's using the tariff as a threat, hopefully trying to get a concession of, okay, well, what if we just don't tariff each other, right? Mm-hmm. But then there are these non-tariff trade barriers that he and a lot of his economic team talk about. And to matter, if you listen, they talk about that a lot more than they talk about the tariffs, right? And that I think is a lot harder to quantify specifically. So I think really Trump just told his team, come up with some formula. I don't really care what it is. Just give me more. Give me the tariff plus more. And I want to use that as the threatening stick to say, if you don't come to the table with me, I'm going to hit you with this very painful thing, right? And I need to rationalize the more. Well, the more, the more it speaks to those non-tariff trade barriers, right? So I don't think Trump really cared what the exact number was. He just wanted something that felt scary and painful to the other person, so they'd come back and say, "Whoa, wait a minute! Like, let's talk turkey," right?
Right.
So I think that's what's going on here trade-wise. Now, you mentioned that to a certain extent, it serves Trump's interest to the extent you're going to have pain, to have it come early and try to get over it as fast as possible. And that's there's a couple reasons why that's beneficial for Trump. To your point earlier as well, he's got his high approval rating right now. He's got the Republican Party behind him in lockstep right now. That might not last forever, so he wants to try to get all the hard stuff done while he's still got as much support behind him as possible. Also, he's got air cover, right? He's been doing this. Frankly, I think he from a strategy standpoint, he should be doing this more, which is really pointing a finger at what he inherited from the previous administration and honestly, previous many administrations when it comes to like the debt problem and whatnot, and say, look, guys, this was so much even worse than I thought it was now that I got here and really dug into things. And so, you can blame a good part of a near-term recession on the previous guy or the previous several guys, right? So it's going to be a little bit harder after Liberation Day because a lot of people are now thinking that Trump is triggering the recession. But he's got a pretty good story to say, look, this recession was going to happen no matter what I did because of all the sins of the folks that came before me, right? The other thing that he is doing here, too, to your point, is I don't think Trump really cares when it comes to revitalizing manufacturing in the U.S. I don't think he's trying to compete with Vietnam to say, look, we want to make T-shirts as cheaply as you can, right? Yeah, I agree. I think Trump's like, fine, you make the T-shirts. You guys are better at that than us, right? What he cares about is the really strategically important goods for national security. And they've been talking about them specifically. These are the semiconductor chips. These are the pharmaceutical ingredients, right? There's a lot of things that are very essentially important to America that we don't really manufacture here at any scale. And I think that's what Trump really, at the end of the day, cares about. So to your point, Jay, I think he is trying to negotiate pretty much a zero tariff world regime with the rest of the world, with a lot of commitments to invest in America, build your factories here, employ our workers to build your products that you want to sell into our market. Now, the reason why I think Trump was willing to do Liberation Day and to really put such a big ask on everybody all at once is kind of like a player at the poker table who feels like he's got the best hand. I think Trump said, look, this isn't going to be popular, but I'm going to force everybody to call. And we're all going to put our cards on the table here. And I'm pretty sure I've got the best cards at the table. And like it or not, folks are going to have to line up because they don't have a better hand than me. And as he's been saying, and his administration has been saying a lot, like our crown jewel is the American economy. We are the biggest consumer of the world's goods. We are the premier market that you want to sell into. And do you really want to bet that you could do okay if you get iced out of the American market, right? And I think most countries, whether folks, again, not saying I love the strategy or don't, it's just saying it is what it is. I think Trump feels like, most, if not every country is going to say, you know what, we're going to have to play ball in some way, shape, or form, right? And when you do that, I think other countries responded completely naturally, indignity, anger, frustration, right? But, and you might have some initial thoughts of like, well, screw those guys. We're going to try to boycott their goods, or we're going to try to forge other trade partnerships. You may be able to, but I think in most cases, once they do the math, they realize, this is not going to be nearly as good as what we could get if we come to some sort of sane agreement with America. And there's a first mover advantage to bolt from the herd and to show up at the negotiating table and say, hey, you know what? I know those guys are angry with you. I want to be your buddy. Let's try to come up with a good deal here. And the longer you hang out and see more and more people get the good deals, your odds of getting a similar deal start to go down, and the pressure becomes even greater to finally cross that line. So I think that's what Trump is betting on. I think you and I are looking at this similarly, and I'll just make one point here to take a beat. As I mentioned, I think at the end of the day, this is all the momentum that Trump wants, but the real key part of it is getting China under control. And China is not negotiating from a great point of strength either, right? They've been stuck in this balance sheet recession that they're still mired in and trying to figure out a way out of. And as U.S. Treasury Scott Bessent said this morning, he said, look, yeah, they're hitting us with the retaliatory tariffs. He's like, I'll take that fight all day long because China is the surplus country. We are the trade deficit country. Whenever you have a battle between the country with a surplus and the country with a deficit, it's the deficit country that wins. They've got the upper hand because, like in the case of China, they buy 5 times more we buy 5 times more from them than they buy from us.
Yeah.
Right. So if they put tariffs, on our goods, we're like, well, it doesn't really impact us all that much, right? If we put tariffs on your good, it makes a huge difference, right? Yep. So to the extent that you want to try to bring China under control, this may be one of the better times given their current position of non-strength. I'll say, I won't necessarily call it weakness, but we'll call it non-strength. So I agree with you. I think what he's trying to do is to get to that zero tariff with most other countries, get China under control. And then there is this thing that he's putting out there. I don't know if it's a negotiating tactic or if he's really serious about it, but he sort of has this baseline 10% tariff where to me, that's sort of like the Costco model. He's like, look, America is the best place to do business. And just like Costco charges like an access fee, we're going to have like just some basic subscription fee, some basic membership fee that you got to pay to play in this market. My sense is that will be removed from all these countries as they strike their bespoke deals with the U.S. But I don't know. That one's one that Trump might keep around, at least for a certain number of countries, because I think he feels, back to the poker table, he feels like he can just force it on them.
I agree. I mean, that's a brilliant analogy, and I think you're right in terms of putting his cards on the table and assuming he's got the best hand. For now, he does, and it might not have been the case in 10 years. Now is the time to play that card, I believe.
Yeah, and so, sorry to interrupt, but one last thing on this too, which is I think Trump is betting, and we'll find out whether he's right or wrong. If he is successful here, and companies come and countries come, and we all make these deals, that he's got time, and maybe his successor has time to patch up the wounded feelings, right?
Yes,
agreed. It's very clear to all of us. I just want to make sure folks watching from Canada and other countries know that I understand our president's pissing off a lot of people right now, and that anger is justified. But I think he's betting that, like, look, we'll all be friends after this. And Trump is famous for that. You look at a guy like Marco Rubio. Trump and he were at each other's throats during the primaries. Now Trump's like Rubio's biggest champion. Yeah, right? I think Trump can pivot like that. Can everybody else? I don't know. But I think Trump thinks, we'll smooth this over later.
Yeah, well, just get back to business, right? And if we could find a beneficial relationship for both parties, then let bygones be bygones and move forward.
Right.
Funny comment. You're right. U.S. doesn't want the jobs from Vietnam. Americans want to wear the Nikes, not make them. It's like a good headline, right? Bring the jobs home. But in reality, that would never play. So, okay, let me pull on a thread here. So sure. the China call it like the codependency, right? Mm-hmm. So yes, I completely agree with Bessent's comments. It would be like me getting in a territory war with my biggest client. Like, I'm never going to do that. I'm going to be very cautious how I walk that line because I need to protect the favor of my largest clients. And China, their largest client is the United States. So they're kind of limited on how aggressive they can be. But there's obviously a codependence there, right? U.S. buys a lot of goods from China. China takes the money, buys U.S. bonds. America takes the money, buys Chinese goods. Like, it is a cycle, and they're both codependent on each other. When you say, part of the strategy here is to get China under control, walk me through where they're out of control. I'd love to pick that one apart a little bit. Where are they coloring outside the lines?
Sure. So the first one, I'm not a trade expert, so I don't have all the details on here, but just listening to the administration, it sounds like, there is so much business that is not being done in China by American companies because of China's mercantilist protective constraints that they place on American countries. So part of it is like, look, we are letting you guys, we're buying all your stuff. We're letting, a lot of your brands do business here. You're not doing the same to us. We're getting the raw end of the stick. So there's that. But honestly, I think what, pardon the pun, what trumps that, and honestly, I don't think this gets enough discussion in the media. But I think this is a really big part of the administration's issue with China is, look, China, you guys are manufacturing the precursor ingredients for the fentanyl that enters our country, and we're losing 100,000 people a year to that. And basically, it's only being made possible because you guys won't shut down your precursor production, right? So I think a really good question for Americans is, how much cheap crap from China is worth 100,000 American lives a year? And the answer to that should be none, right? Yes, America has become very dependent on buying cheap stuff from China, but if the price of that, even forgetting about the trade imbalance stuff, if the price of that is that we're losing, 100,000 American lives a year, is that something that we should accept? And I would hope anybody with a conscience would say no, right? And part of what Trump is trying to do with trying to revitalize American manufacturing and boosting American growth and cutting taxes is to say, hey, look, maybe being dependent on cheap stuff from China isn't the best model for our culture. And maybe we might need to start sourcing from elsewhere domestically and other players. And maybe that might be more expensive, but I can offset that by growing your wages faster and reducing your taxes, and net will be much better.
That's a tough one, right? Because morally, you hear that statement and automatically I agree with it 100%. But, the history of human decision-making does not support that so well. I mean, every one of us watching this episode here has purchased some cobalt. It's in the little device in your phone. Most people know where the majority of the world's cobalt comes from. It comes from the, young teenage boy in flip-flops, ankle deep in acid and chemicals, digging it out by hand in the Congo. That's where this cobalt came from. I know that to be true. I still bought the iPhone. I consider myself to be a good person, but I made that choice. And it's out of sight, out of mind. I don't know what it is.
I think it's a great point. The only thing I'll just interrupt with to say is I think the calculus gets different. It's still, look, we're still accepting this trade-off. So there's not a massive American consumer grassroots boycott of Chinese stuff over this. So you're right. But I think it is different if it's Canadians versus some other country somewhere I'll never go to, right? And it's not necessarily ethically fair, but it's just we care more about our own than we care about others, right?
100%. Yeah, no, I agree with that. And, the China firewall, as they call it, right? A lot of American technology comes in, it's kind of harvested, and then it's kicked out, right? And there's a Chinese comparable that launches a couple of years later.
Especially, sorry to interrupt there too, but that becomes even more important in the age of AI. Right.
Yeah.
Where that kind of, intellectual IP, that's going to be increasingly sort of like the military. It's going to be the way in which countries determine their dominance. And if we're dependent upon players like that, especially unreliable players like that, for something so essential, it's really sort of a non-starter, which is why, again, I think Trump has just taken such a hard line on this, and why, one of the key things he's trying to do, and Biden, to his credit, started this, is to, reshore manufacturing of some of these critical elements, and that hopefully eventually we won't depend on anybody necessarily outside for key things like that are that strategic.
Right. Now, we sort of touched on the concept of a third term loosely, because it's something that Trump said publicly and Bannon said publicly, and that they're making they're trying to find out what the legal grounds would be to run. And I think they'll find them. I think he will run. And let me give my audience a prediction here. That's going to happen. I believe that'll happen. I think they'll find the legal grounds to run. He will run. And we can just imagine what the response is going to be from the Democratic Party, from the liberal media. Fairly bombastic, maybe deserved, but fairly bombastic. This is the destruction of American democracy. We told you this was going to happen. This is the authoritarian run, all this stuff. And I bet you very few people will look into the history of term limits and find how recently they were implemented. It was like, I mean, FDR won 4 elections.
Right.
America hasn't had term limits a lot longer than it has had them. 1947, they were implemented at kind of like the last fourth turning, right? During that changing of world order. And you could make a strong case that term limits in general are anti-democratic, because if the American people want to keep a president for 12 years, shouldn't they be allowed that privilege? And if he's such a terrible guy, then run somebody else and beat him. I mean, that's how democracy is supposed to work. And we don't have term limits in Canada. There's cons to it as well. I'm not saying it's all gravy, but, you know, you can make a sound case either direction. You know, if that's the case, it would support our earlier conversation about do the economic damage now in year one when you can afford to, you've got high approval ratings, you're safe in your seat. But as you get closer to either the primaries or the end of your 4 years, you got to change things. And maybe Lutnick can find $1 million in revenue. Maybe Elon can find $1 million in cuts. Maybe they can get close to a balanced budget. Anything's possible. But that would be
trillion, not million. But I got it.
Right. Did I say $1 million?
Yeah.
Wouldn't that be nice? Yeah. $1 trillion, of course. You know, and that would be the play, right? Is to come back to the table in 3 years with that brand new picture. Yeah, it was really tough in 2025, but look what we did as a consequence. Do you see any, probability in that outcome, Adam?
Well, so let me agree with you, and then I'll take the under on the bet just for fun. I don't have a strong opinion on it, but it's always fun to have two sides of a bet. So again, I think a big part of Trump's the aggressive speed with which he's moving is because he's got the midterms like front and center in his brain, saying, look, if I'm not showing an economy in recovery close enough to the midterm election, then there's going to be a blue wave, right? And we're going to lose Congress, right? So I don't think it's the end of the world for Trump. In other words, I think he's just saying, look, I got to front load all the reforms I want to get done before 2 years are up. Right. And so even if I've got a gridlock Congress, that's OK. I can deal with that because I got everything I needed to get passed beforehand. Right. So I think it's a big part of what he's trying to do. Now, I also think he's trying to get it done so that it does start showing recovery and that hopefully maybe Republicans actually do even better, in the midterms. But I think I think that's the plan B. I think his presumption is I gotta act as if I lose Congress in the midterms, right? Now let's assume he doesn't, right? And let's assume that he's able to get past what you said he can get past and potentially run for a third term. To be honest, I mean, look, I'm totally guessing here, Jay. I mean, Trump's such an egoist. Would he want to serve a third term? Yeah, I can easily make that case. I have heard him say at times that he doesn't want it. And I know a lot of viewers will probably say, come on, Adam, you can't believe that at all. And I agree. I'm just guessing here. But how old is he going to be when
That's
that happens?
Yeah, exactly.
I don't know.
The term limit. What about the age limit? Yeah.
Yeah, I think he's just... So he all right, look, I don't really know. And like I said, I'll just take the under just for fun. We'll make it a beer, and whatever happens in 4 years, we'll exchange the beer. But I think, Trump is... he probably wants to enjoy his twilight years once he gets there, right? He'd probably much rather be, somebody that the next successor, if a Republican gets elected, comes to him and visits him in Mar-a-Lago, but Trump can play golf and, whatever. But again, I could totally be wrong here. But I think what's really, I think what was wise about Trump, and I think which was intentional, is they branded the MAGA movement, right? Make America Great Again. They didn't brand it the Trump movement. Right. So he wanted to build something that would endure beyond him. Right. And you're seeing them recruit people under the MAGA umbrella. And they've risen up people like Vance, people like Tulsi, people like Ramaswamy, et cetera. So, there are people who can carry this administration's set of policies and priorities ahead into the next administration if they run and get reelected. Yeah. So my sense is that Trump and the MAGA movement is very much working on and cultivating that transition with Trump as the pioneer, not as the permanent king of it until he dies at age 97. Right now, I could totally be wrong. I could easily be wrong, But I think there was some intentionality of creating MAGA as a brand so that it becomes less Trump dependent over time.
Yeah,
it doesn't require him to have to get a third term to continue.
Yeah, that makes sense. That makes sense. It's a risk for the Republicans. I mean, if you, in like over 100 years of American elections, whenever a new president is elected, it's almost always of the opposition party.
Right.
I think 3 times in over 100 years, there's been the same party elected. And the only recent example was Reagan Bush, I think. But then obviously it was, Bush, Clinton, Bush, Obama.
Yeah.
Trump.
And it's always two things. It's two things that gets them in or gets them out or keeps them in, which is it's how the economy's doing, right? And it's whether or not we're at war, right? And Trump, to his credit, has really pushed himself as a pro-peace, anti-war kind of president, and at least his track record so far, is successful at that. He hasn't yet, at least, involved America in any new foreign entanglements, and he's actively trying to, get the existing ones that are going on resolved. We'll see if he's going to be successful in that or not. So hopefully he's not going to bring us into a war, in the next 4 years. So I think it's all going to be on what's the economy's doing. And to be honest, I will say I am, and again, folks, that's not a partisan comment at all, but I am more optimistic about America's long-term economic prospects now than I was 6 months ago. And it's not just because I think we have a clearer vision of what we wanted to do. I don't think under Biden the vision was as clear. But everything that Trump is trying to do right now is, borrowing from, in large part, from the Reagan playbook. These are all things that are historically shown to really boost economic growth. And I've interviewed folks like Judy Shelton and Art Laffer, who have been and still are economic advisors to the president. And, Art Laffer has been advisors to a number of different presidents since, I think, the Nixon era on both the Republican and the Democratic side. And Laffer said he's never been more optimistic about America's growth prospects than he is today. And it's because of these policies. And so if Trump if he's successful and allowed to enact them, I find it hard that America will not be growing at a substantially better rate in 3 years than it is right now. And if that is the case, as we were saying earlier, history shows that's when you get your party reelected. Yeah.
Yeah. Okay. Look, I want to pivot a little bit to the market and what you're looking at right now, Adam. So volatile times. Markets whipsawing almost every 48 hours right now.
Yeah. Should we? I know we didn't tell folks what day we're recording here, but the market
April 9th. It's Wednesday, April 9th today. Nasdaq's up 8% as of this morning.
And 20 minutes before I came on with you, it was red.
Yeah. So, quite frankly, on a personal level, I don't even bat an eye at that because I'm not invested on like a 1 month time horizon. Mm-hmm. I'm a multi-year guy, but and I encourage, and most of my audience is as well. However, that doesn't mean it's like easy to manage your emotions when this kind of volatility is occurring. So, anyways, what are you looking at right now? If you're looking at like preservation of capital, safe haven, ballast in the portfolio, what strikes you as decent bets right now?
Okay, so. Let me answer in the short term first. And again, this is so it's the same answer I would have given an hour ago, but a little different spin. So in the short term, man, I think you just got to be super careful. Like in the immediate short term, I think the next couple of days, I don't know when this video is going to go live, but I could see, the next week or so, markets up pretty decidedly, just because things had gotten very oversold with the sell-off before Liberation Day. Mm-hmm. And then after Liberation Day, we had these just massive sell-offs in the market. So we went from oversold to like crazily oversold. Given the chaos of the Liberation Day tariffs, I think a lot of players then went short to try to take advantage of that. And I think you're going to see a lot of short covering over the next couple of days. So, today is up, like you said, almost 8% in the S&P. That's a massive number, right? And that's, I think, because, there's a lot of shorts that are all of a sudden just getting completely zorched, right? That are having to rush in to buy. That may continue a bit over the next couple of days here. So, I don't think either of our audiences are big day traders here, but I'm prefacing my coming negativity with saying, hey, I think the markets could do pretty well in the very short term here. I don't think we're through, the uncertainty and chaos of this administration. And maybe in a minute we can talk about risk of recession this year, which I think is high. And I think the tariff, turmoil that we've had has been, kind of like somebody already sort of teetering on the cliff, and that was probably the shove. We know that a lot of CEOs have been reporting that they are freezing orders, they're reducing their capex. All those things are going to have knock-on effects no matter what happens in the next couple of days or weeks with tariffs here. But there are a whole bunch of reasons to be concerned about a coming recession, even before the tariff tempests stir the soup here. So in general, I kind of encourage people who are trying to make it through 2025 alive to be defensive. Right. So, I mean, there's the low hanging fruit of, stay in T-bills, stay in hard assets that could benefit from, a safety trade or just some of the other big trends that are going on. Gold is at the top of that list and should be no surprise. It's been performing awesome this year. I know less about Bitcoin, to be honest. You're much more knowledgeable about Bitcoin than me, Jay, but a number of the folks that I've been interviewing recently, Jan van Eck of Van Eck Funds, who I'm just fresh from a conversation with him yesterday, still quite bullish on Bitcoin. Let me put it this way. What could hopefully be happening here is if we see continued market turmoil from here, is that we start having better valuations creep into the mix. Valuations were ridiculously distorted at the beginning of this year. I'm sure you talked about this a lot, Jay, but I mean, they were by some metrics the highest they'd ever been. And you want to buy low, sell high. You want to buy when things are at good value and sell when they're at stretched values, right? We haven't seen good values in many assets for a long, long time. All of a sudden, I mean, an hour ago, I would have said, "Hey, Jay, there's some, you can argue there are some good values beginning to emerge in some stocks here, even the ones that had done crazy. Like a lot of the Mag 7 stocks, they were getting down to a PE ratio that was pretty much in line with the major market indices. Now, I could sure argue some of them might still be overvalued or whatnot, but they were a lot better values than they were before. If we go into recession this year, and we have continued market volatility, and if we still have more correction to the downside, which I believe we do, we may get to a point later on this year where we get into true bear market territory, and you get to a point where investors are starting to kind of give up on great companies. And so, a whole big part of being defensive is having that dry capital to deploy, when the real good values surface. And if you're able to buy good values, then with the potential of a resurgence in American economic growth, on top of that, there could be a really good, optimistic era lying ahead of us here for investors. I don't think we're close to it yet. I don't want to be too Pollyannish about it, but I just mentioned that because I think while it might be kind of boring, like my advice might be boring here in the near term about where to park your capital, I feel like we could be 9 months to 2 years away from a moment where I might say, geez, this is the point to start getting that dry capital deployed. Mm-hmm. And you might be setting yourself up for several years of just phenomenal returns by being able to buy great brands, great companies at deep discounts. So anyways, in terms of any other places to be looking at here, there are still pretty good valuations in the commodity space. A lot of the producers have gotten pretty hammered actually over the past month. One sector that keeps coming up a lot with the folks I talk to are the midstream enterprise companies in the energy space.
Okay.
There's some really good producers there that kick off great dividends that had been hanging in there pretty well that have sold off recently. And I don't have any particular names to mention because I don't follow that space super closely myself. But a number of the folks I've talked to have brought that up enough that I think it's worth mentioning here. It's a good place to go explore. I don't know if that's a space that you look at yourself there, Jay. Is it?
It's not. No.
Okay. And then internationally, it's been rough. There were a lot of guys who were internationally focused who I was interviewing earlier this year who were saying, hey, this looks like it actually could be the year where there's a rotation away from the U.S. To emerging markets. And we started to see that earlier this year. Of course, that's gotten kind of all upended by the whole tariff thing here. But one bright spot in there has been India. India, massive powerhouse, a lot of growth potential. I was just talking again to Jan Van Eck yesterday. He was a massive India bull. And I asked him, hey, what do you think of India? And he said, well, it's sold off enough now that I think it's going to do great, but I think you're actually getting some really good values now to be able to invest in that space. And I'm not worried at all about the tariffs. Whatever we agree to in terms of trade terms between us and India, whether we get favorable or unfavorable deals, that country is going to grow so fast. The trade decisions are going to be immaterial. So if you're looking to look outside of the U.S., India seems to be one of the best bets out there right now.
Now, I'd love to know more about that. I mean, obviously, India has some of the most favorable demographics in the world, which plays a big role. Demographics is often a leading indicator. What else are you or Van Eck seeing inside the country that's so optimistic?
Yeah, I think tremendous growth. Obviously, it's a massive population, but there's it's still a relatively poor population, and there's a pretty big rising tide there as you get people who are subsisting off of a very small GDP per capita number, and if you can grow that materially, it's got a bigger effect at the margin than, say, a similar increase, at least absolute increase in a Western country. So, a great example, which you probably heard before, is, if a gallon of gas is marginally cheaper to an American, they're filling up their big SUV. They like it, but they don't really care about it. If that extra gallon of gas, that savings on the extra gallon of gas to a guy in India, he may upgrade from a bicycle to a two-stroke engine. Right. They can dramatically increase their quality of life, their standing in life, and their ability to earn further. Which then so it's a growing consumer market, but also in terms of kind of like China, which is graduating way more PhDs than America is these days. You're getting a larger and larger or large and fast growing educated base there. So using our Vietnam analogy, you're not just making. It's not a country that just makes T-shirts, right? They're taking on higher and higher order level products that they're able to produce there. So, just looking at the returns of the companies, in the openness of that market relative to China. And again, I'm not a massively experienced India investor, but it's clear from Van Eck, which invests all around the world, that this is what they see as the crown jewel in the. Sorry, there's one stat I'm trying to remember, but it was Saudi Arabia, Brazil, and India, their share of global GDP right now versus the EU, or at least in 2018. You'll see by 2033, those three countries will have exceeded the EU. That just shows you the scope of how fast these economies are growing.
Yeah, no doubt. I haven't actually. India is a country I haven't visited yet, but we're kind of in the neighborhood. I'm in Canada today, but we've been putting down roots in Indonesia, and my kids go to school there now. It's the majority of our time is there. Sri Lanka is sort of next on the list of where we want to explore, which obviously is just a short hop across the water. I've heard that thesis enough times now, Adam, that it's very compelling and worth keeping an eye on. Getting back to let's wrap up with a bit of some thoughts on just American economic outlook. We touched on the markets a little bit, an interesting thesis there. One of the notes, as we were chatting before we hit record here, is some of these, the DOGE cut goals are inherently recessionary, you could say. If we're able to cut $1 trillion off the deficit, that's going to have a massive impact and probably not good in the short term, maybe in the long term. So what's your outlook on the American economy right now?
Yeah. So I'm going to refer back to Jan again, because in our conversation, he started with kind of his key trends. And trend number one was that DOGE equals recession. That DOGE is basically looking to try to DOGE and some of the other projects of the current administration are looking to try to save or cut fiscal spending, right? So we've had historically high fiscal spending over the past administration, such that we're spending at crisis levels, right? The only time we've had the deficit is this type of percentage of GDP has been like when we've been like in a world war, right?
Yeah.
And so there's a lot of research that shows that deficit spending boosts corporate profit. So we've had these 2 great years in the stock market, right? 20% plus beats year after year in 23 and 24. But a lot of that prosperity wasn't really real, right? It was artificial. It was juiced by this deficit spending. Now that we're trying to get the deficit spending under control, to the extent we succeed to that by any measure, that is going to be slowing economic growth. It's going to be depressing corporate profits. And by his calculations, Jan thinks that $1 trillion in cuts, kind of through all the different DOGE and other things that are going on, is not unlikely, right? And if you remove that 1 million from our $6 trillion deficit right now. So if you remove that trillion from 6 trillion, it's a pretty marked decrease, and enough that Jan is pretty confident that that'll trigger a recession. Now you take all the other uncertainty that we had on top of that, with from the tariffs and whatnot, with CEOs tightening their belts and not sure what they should be committing, so they're just going to sit and wait. They're going to reduce their capex. That's a multiplier on that, right? So the risk of recession begins to get pretty high. On the day we're talking, Citibank CEO, JP Morgan CEO Jamie Dimon was interviewed and asked his thoughts on recession. And Dimon talks to captains of industry all day long, and he's not a guy who's prone to hyperbole, and he doesn't want to be, right? Because he doesn't want to freak people out. But even he said, at this point, my defaults were going into recession. Now, he doesn't think it's going to be terrible. He's saying, look, folks, this isn't going to be a 2008 style crisis. It's going to be more of a garden variety recession, but it's going to be a recession. What's interesting about recession risk is, we could have talked at the beginning of the year, Jay, and I would have given you a long list of things that I think, were likely to potentially cause recession in 2025. It's clear we're seeing the consumer increasingly struggle. We're seeing retail sales flatline, maybe even go down a bit on a real adjusted basis. We've got liquidity that's starting to drain from the system above and beyond the administration's attempts to curtail the fiscal deficit. So there's a lot of things that were tailwinds that are now shifting to become headwinds. But in addition to that, we have DOGE, as we talked about, and we have the tariff uncertainty. But there's another thing that's really interesting that really just kind of got put on my radar last week by Anna Wong. She's the chief economist at Bloomberg Economics. She looks a lot at credit scores and the credit worthiness of consumers. And what she's been hearing in the industry is, the consumers are starting to struggle a bit. We're seeing their delinquencies rise. We're hearing anecdotally they're having a tougher time. But hey, don't forget, unemployment's still quite low, so they're doing fine. And secondly, if we look at their credit scores, they're substantially better than they were back at the start of 2008. Right, so they're not nearly as vulnerable as they were credit score wise as they were right before we went into the GFC. And Anna looks at that and she says, you know what, actually, but there's just like in academia where there's been grade inflation, with what used to get you a B now gets you an A.
Right.
There's been a similar effect going on like that in the credit score industry. And so when you kind of discount it back to get to like kind of a real credit score, right. She says they're actually not that different from when you compare them on that sort of real basis compared to the beginning of 2008. And what she's saying is she doesn't think that the lending industry fully appreciates that yet, is fully aware of that. And so what happens there is you get information asymmetry, where the borrower, the consumer, they've got a much better sense of their true creditworthiness, right? And if it's deteriorating, they're like, well, I'm going to go out and I'm going to try to borrow as much as I can while I still can, right? And the lenders are happy to lend it to them because these folks, quote unquote, have a good credit score, right? So as the delinquencies and defaults really start ramping up and the creditors realize, oh my gosh, the consumer is actually not nearly as healthy as we thought, they're going to start tightening lending standards, right? So you're going to get consumers that are going to start drowning under the increased debt loads they have. They're not going to be able to get new debt. And if the economy is slowing in that time frame, that's going to constrict consumer spending. That's going to roll back into meaning less corporate profits. Companies are going to have to tighten even further, start laying people off, and you begin to fall into that vicious cycle. So what's interesting about this whole credit score thing is it's yet another material recession risk that wasn't really even clearly on my radar until a week ago. So there's a whole soup of things that I think suggest that America will be lucky to avoid falling into a recession at some point this year.
Okay. Adam, look, thank you for coming back. It's always great chatting with you. Appreciate having you on the show, man.
Hey, it's such a pleasure, Jay. If I can do one shameless plug on some free resources for folks.
Please.
So the big message that I've been trying to turn on in people's heads here is look, I could be wrong. I hope I'm wrong. But if for all the reasons that you and I have talked about, Jay, do prove out and America does go into a recession, if you work for a paycheck, right? If you're dependent upon an employer for your income, there are steps you can take today to reduce your vulnerability to getting laid off. And there are definitely things that you should do immediately upon getting a pink slip, if you find yourself a victim of a layoff. I years ago had written a guide called the Layoff Survival Guide. I've updated it a bit. And so that's available for free to anybody who wants to read it. You can go get that at thoughtfulmoney.com/layoff. And then lastly, the better answer to your question, Jay, of, hey, what should people be thinking about owning is, the better answer is one that takes into account the person's personal financial situation, their risk tolerance, their goals, et cetera. And that's why at Thoughtful Money, I try not only to bring experts on the channel so folks can learn from them, but I also try to connect people with financial advisors who take into account all the macro issues that these experts talk about. So if you, as an individual listening to this, if you don't have a good financial advisor who understands all the macro issues that Jay and I have been talking about here and is guiding your portfolio accordingly based on that, feel free to have a free consultation with one of the ones that Thoughtful Money endorses. And to do that, you can just fill out the short form at thoughtfulmoney.com. These consultations are totally free. There's no commitment to work with these guys. It's just a free public service they offer. And like the layoff guide, it's so much better if you take these planning steps now in advance of a big market correction or a recession or getting laid off than having to scramble, in reaction once those injuries potentially happen.
Yeah, 100%. The Layoff Survival Guide, but check out thoughtfulmoney.com. Why not sign up for one of these free consultations? There's no downside. Just get some perspective and opinion. Always valuable. Adam, thanks so much for coming back on. I'm looking forward to getting you back on stage at the VRIC 2026.
It's going to be great.
January 25th and 26th in January. It's beautiful. Vancouver, British Columbia. It's not beautiful, but it's productive. It's a great conference, and I'd love to see you there. I'm glad you're going to be out there this year, Adam. Thanks again for your time today.
You're welcome. And as I've said, Jay, I go to a number of conferences. Yours is hands down the best produced. So kudos to you and your team for putting that together. Man. You really do put out the Rolls-Royce version, and I'm completely looking forward to being there.
Man, I appreciate that. It's the team. I've got an amazing production team, so I appreciate that very much. All right. Thanks again, Adam.
All right, my friend. Take care.